The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Hi, guys. Welcome to the Tom O'Brien Show. I'm John Logan, filling in for Tom today. I used to do a morning show. We might get back into that someday, but while Tom's away, I thought I'd sneak back in, get an hour in. Good to be here again. It's always good to watch the Tom O'Brien Show and talk to everybody in the den. It's been a while, and it's good to be back. So let's get right into something here. I want to show a chart on the S&Ps, and then I want to move into the Treasuries. Because, you know, those things kind of were in a tug of war for a little while there, and it looks like the good old S&Ps are going to win. I'm glad for most of the investors out there that the market's still holding up, but it's, you know, it's kind of hard to go long and hard to go short up here for me. But I want to talk about a couple of things technically that may be of interest, just so you can get a kind of a bird's eye view and make some decisions for yourself. And by the way, I think Tom has got something on the homepage of the TFN. I've obviously been working on a scanner for a long time, and I've got a really, I think, kind of insightful video. It's about 8 or 9 minutes, and I think you can access it off the homepage, and you can take a look at what that whole thing is about, and feel free to take a look at it. But what that scanner relies on, really, for the most part, are looking at profiles, and we're going to talk about profiles as we look at these S&Ps and look at the Treasuries in just a second here. But you know, scanner kind of cuts quickly to the meat of the equation when it comes to looking at the individual instruments or the broad indices, futures, currencies are in there, and this is the way that I base trade. This is what I base trades around. Is what we're getting ready to talk about. So, you know, had some cracks in the armor obviously yesterday, and what I want to point out here is, you know, these inflection points on our long-term weeklies and these profiles, this, you know, volume relative to price that we're going to talk about. You know, the longer-term time frames, as you drill down to the right into shorter-term time frames, those longer-term time frames always take precedence when it comes to, you know, the inflection points that are really the powerful pieces in my mind of these profiles. So what does that mean? 2404.50 down in or up into 24, I believe it was 06, which is another inflection point we're going to look at in a second. That was kind of a DMZ kind of dig-in point yesterday if you were going to think about nibbling on the long side. And again, for guys out there who are just going long Cisco and hanging on for months, this might not be super interesting to talk about day-to-day fluctuations in the S&Ps, but you can look at this information and get some long-term views. And, you know, the bottom line for me is, when is it okay to be long, not okay to be short, or okay to be short, not okay to be long, and just looking at it really black and white simply. So we've defended the top of our profile, all things considered, of what I was saying before, at that DMZ or at that neighborhood around 2404.50. And I think yesterday we reached a low of what, 2402, 25. So in volatile times, especially like yesterday, and you just kind of had some kind of a throw-up situation at the bottom, and then a pretty quick reversal. You want to see instruments really defend these long-term inflection points like they did yesterday. And we've been kind of staying above profiles here for a while, 240450 on the S&Ps. This is the futures, mind you. But as we closed above there a month and a half ago, we went back and retested. We've kind of been strong, and yesterday was a really, really good litmus test that, we ain't really changing tone yet. So it kind of raced away from those inflection points that I just spoke of pretty seriously. We've got a good bounce off of there. So, weekly close back in below those numbers for long-term guys out there would really kind of predicate possibly an exploration of an entire fair auction. In this case, believe it or not, the next lower number on a long-term time frame is around 23.26. So, that's a 75 point, 80 point move down, but we didn't get that confirmation of closing back in the box, so to speak, to really even start getting excited about anything was coming apart at the seams on a long-term situation. So now that I've said too much, I want to pull up our daily and let you understand that 2406, that 2404 was defended very, very well. And we've kind of started creeping, if I can use that term, a little bit higher above the daily profile, and that means we've kind of cleared all congestion. I want to show you something in the scanner. I've got some stocks up on the screen right now that we're just breaking down on today and this week, actually, which I want to talk about those in a little bit. But as I go into the dashboard, excuse me, and I look at our S&P kind of sell structure, we're green again for the most part, especially on the long terms. Our weekly breadth hasn't wavered that much, and breadth being kind of an aggregate look at profiles within the index of all the internals. And, closing a week relatively positive like this is not, you don't want to go home this weekend, I don't think, short. So you got about 50 minutes left to not be short. So, that's one of the things I wanted to talk about initially. So if that's the case, as a trader, and again, you long-term guys are just happy to see this defense mode that it's been in, but as a trader, you might be able to pick up some things that are not exactly going with the market, try to find some anomalies, try to take advantage of those anomalies from a trading standpoint. And, a lot of times when the market's making moves like this or it gets volatile, it'll kind of have stocks show their hand, whether they want to go along with the volatility, whether they want to go down with the market, and more importantly, what at this state from yesterday's afternoon to right now, want to go up with the market. So that being said, in a little bit, we're going to take a look at some stocks after we look at the treasuries that I think are relatively ripe opportunities that may be given out of gas in general.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I'm John Logan, filling in for Tom O'Brien. One of the things I wanted to reference, just kind of a proof of concept situation before we get into the 10-year and the 30-year, and then some of the stocks we were talking about. Here's the CSI 300 out of China. China. Did I say that properly? So one of the cool setups, as you'll notice, now these profiles are outputted, really ahead of time of what I'm getting ready to show you. They're not optimized or kind of, curve fitted for what we're getting ready to talk about. But when these profiles are what we feel is the balanced area for the instrument that they're mapped on top of. So a little bit of a primer on it would be, stocks. There's three states that an instrument can be in. They can be in a balanced state outside the profile and an imbalanced state on the upside, or outside the profile and an imbalanced state on the downside. So a stock's either balanced or it's imbalanced. And when stocks get out of balance, excuse me, a lot of times they will, like you're watching here, they'll go and kind of test those numbers. If they break out, a lot of times they'll go back and kind of use former resistance, now support. So this Shanghai trade, I know everybody watching this show is trading the Shanghai, was a very powerful setup after the breakout, because that's where you're just hoping and dreaming that an instrument will come back and retest. And why? For starters, it's technically a ripe setup. The other two things are, where to enter the trade. The second thing is, you can really ratchet down the risk part of the trade. So trading's all about managing risk. I know you guys have heard that and probably read 10 books on it, but the risk reward scenario is predicated on that risk and the target, or the risk being where your stop's going to be put. So, and how much your appetite for risk is. So if you're going to bank on picking the battle around some of these inflection points, and that scanner shows you all of these, okay? You don't need the charts. You know where the minefield is. You can actually enact some relatively high probability trades while enacting a relatively high risk reward scenario. And the Shanghai obviously is in the clouds up here, right now. But this week, we also had a profile appear below price action that's just bullish in nature, period. We've got a good technical kind of setup up there from a classical standpoint. And the overseas markets ain't looking that bad, is what I'm trying to say. So that being said, let's take a look at our two treasuries we're going to talk about. The 10-year, there's a picture of it. And there's something that really broke my heart because, trying to figure out how to trade the S&Ps up there in the stratosphere, like I said at the beginning of the show, stuff's going long or goes short up there right now. Just, you're like, wow, when does the madness end? But let somebody else figure out where the top of the market is on the short side. We need some confirmations. And there was a decent little sell-off yesterday, but guess what? All we did is stepping back, looking at the long term, found our support that we knew ahead of time, and just, was on the launching pad again. So that's not nice when it comes to looking at conviction on the short side. But as we look at the treasuries and we look at this 10-year, we're going to have a close within the profile. And I actually was thinking the easier trade, and we're not always right, unlike some folks out there who will tell you they're right all the time. All we do is look for probabilities and try to trade those probabilities and try to lever off of them. So, with these treasuries kind of sitting up here trading above profiles, it was a very interesting situation as they've gone sideways the last month or two, and the markets continue to climb or look very attractive. Who was going to win that war? This is usually a relatively inverse situation to the market. Safety plays with notes and bonds and people wanting to be in the market and exiting those notes and bonds. I know you guys have explored that relationship more than likely. But eventually the notes and the bonds just said, I'm giving up. So I assumed that the easier trade was maybe to get long notes and bonds. And, if the market comes off, these things might move up anyway. If the market keeps going higher, at worst case, they might go sideways. So I was kind of looking at that relative relationship. But we always have to put a line in the sand. And this line in the sand on the 10-year was around 126.07. There was three major inflection points lining up on three different time frames right at that level. So as we pierce back into the profile, a lot of times these profiles are fully explored, especially when you can get a really good stake in the ground with a weekly close. And I kind of think that within the next 40 minutes, the 10-year is not going to rally a point. I'm just going to make that bet. If somebody wants to take the other side, call in the show. We'll talk about that. And so the close is probably going to be back in the profile, and therefore that's pretty damning for longs on the treasuries. So that's the picture there. Now let's go to the 30-year. So if you've been thinking about that long treasury trade, you've got to, you've had a chance to get out of this already as we started piercing the top of that profile. But here's the similar situation, reversal after closing above the profile in the 30-year. This is really, really awful for treasury traders on the long side right now. And there may be some more carnage next week on the downside, considering that a lot of people were a lot of people were noticing this relationship. So now a lot of those people are going to have to exit that particular trade. And the door's probably not big enough for all of them to get out at the same time. So you got to kind of figure that might actually have some more noise to it on the downside. All right, so what are we doing moving forward? So the S&P's, again, going into pretty lengthy 4-day holiday here. I don't think anybody in their right mind is trading Monday. I think it's a half a day. There's really no fear in the marketplace on the equity side. So again, the treasuries may come off a little bit more, and watch out for that. Now, I want to look at gold before we start looking at the individual equities. And there was a trading opportunity. I'm showing our long-term profiles here. This is our box, so to speak. There was a trading opportunity last week. We came down into this 1240, 1241. We actually found some higher support after we bounced, and we're able to kind of, have a little trading opportunity. In weekly profiles, we got to pay attention to the POC, the point of control, the top of the mountain. So that hit that, backed off. And now this week, we're basically closing back where we bounced. Not good. You want to see these things bounce away from the other side of the profile, and you want to see them stay away. So coming back, ratcheting back down, and the next week following, you easily could have some more downside on this. And with the market looking like it's looking, doesn't look like people are really anxious to buy gold right now. And be prepared. That may not bounce again off that same inflection point. I'm trying to say, guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys. Welcome back to the show. I was choking there. All right. I'm filling in for Tom O'Brien. I'm John Logan. Thanks for being with us today. All right. So we were kind of finishing up with kind of a gold talk as we summed up the where we're headed with treasuries, broad markets, and what the possibility of gold was after it just kind of reversed back down into that inflection point it bounced off of before. What does that mean in the grand scheme of things, trying to put all these variables together? Somebody mentioned in the den a really actually good thought to talk about. There's always a balancing act. A lot of times, treasuries will act inversely and to the broad market, and then at some point they'll both go the same way the same day. And it's almost people start, that starts hitting home. I forgot the gentleman that said something. Who was it in the den? Can't remember right now. But wouldn't a sell-off in treasuries almost cause a little bit of a panic in stocks and equities and ETFs and whatever else you're trading on the equity side? Yeah, at some point that would become a little concerning that rates will be going too high. I think that is definitely valid, but I don't know if we've actually come off enough because the treasuries had rallied so much, and we're sitting on the launching pad there looking like they were going to go higher. At some point, those chickens will come home to roost, if I could put it in a familiar metaphor. So coming off too much in the treasuries could cause a little bit of a panic in the U.S. stock market, but I just don't think that, rates coming off their or rates going up into their lofty and crazy extended areas right now are going to be something to really concern the stock market with yet. But killer thought, and thanks for bringing it up. All right, so I tell you what, let's before we get into some stocks, let's switch gears a little bit. Somebody asked me to look at some currencies here, and I want to show the Japanese yen. A little bit of a kind of above, breakout above the profile, kind of stay above, and using that to pick some battles there on the Japanese yen at 111.78.79. A lot of guys out there listening to this show might not trade currencies, but currency fluctuations will also be a piece of the puzzle, as you know, the guys in the den, especially the veterans, to cause gyrations in the U.S. stock market. So right now the Japanese yen on the daily has kind of ramped up a little bit, but I want to back up. Remember, the first part of this show we had kind of made the point that you have to look at longer term inflection points and kind of gauge them by order of importance as you scroll to the right to lower time frames. And as you see this, the yen defended successfully, very well, the 108.87 area, as you can see there, and we have kind of used these. If you are watching the screen, if you get a chance to look at this when you get home, this show's recorded for people out there in their cars. This is, again, all information within the scanner that you could take a peek at. But these inflection points are really, really powerful the more you get into these longer term time frames. As you can see there, these are the insane places to pick battles. And again, we didn't paint this after the fact. So right now, the yen's at a precipice on the long-term weekly. And that precipice, and I'm going to tell you to the tick here, and you can find this right in the scanner. I can go into the Forex section like I'm doing right now. And if I could find the yen, where's it hiding? And I'm completely embarrassed. Where is it? There it is. All right, so you'll see that top there. That means we're at the top of a profile. It tells you plainly, you mouse over it, and there's the numbers. So going back to our bar chart, not that I needed that. Let me actually click on it and let me show you something. All right, so as the chart in here is telling you, oh, and we got some really cool new charts going in here, by the way, much better than these. We're right there at the precipice. So, what do you do with this? So the whole time we've been bouncing for the long-term guys, we've kind of got, we use a time frame to the right to kind of regulate the trade up. That's kind of been long. But when you get up into this inflection point, you got to at least be willing to take some longs off the table, if not all of them, and wait and see what happens. And I think right now, if you wanted to put on a short, you've got no better opportunity than right now to do it. Because again, what's the most important thing? What's the risk reward? What's your risk tolerance? How do you play defense efficiently? Well, you've got a chance to play defense here efficiently. And that's the drill on the end. So, a couple other things on the currency scene. the euro. And we're going to talk about the dollar. Obviously, Tom's dream has come true. It has imploded. And the euro being about a certain percent of that dollar. I want to show you something here cool, too. So, again, using that same mindset that we've been talking about on this show, we get above, we go back and retest. We've got a new profile edge tire. We use that profile low to defend. Great place to pick battles. Launching pad. Dollar technically on the ropes there. The euro inversely climbing the wall of worry from Europe. That's the scene there. I'll tell you what, we're going to get out of the currency scene for a second. We might come back to it, but I want to reference the dollar because this is our dollar futures. And let's pull up the weekly here. And about the same time the euro was breaking out on that weekly, guess what? Dollar was breaking down. So, you know, you had kind of everybody on the wrong side of the trade on the dollar and getting some of those shorts deep convictions. You had that similar action happening on the euro. So nice little scene there that happened, all relative to currencies. And my trip overseas has just been delayed. All right, so we're going to take a look at a couple of ETFs before we look at stocks. I want to take a look at the oil sector really quick. All right, so the XLE, you know, with crude kind of doing its thing and really rallying quite a few percentage points. We're going to get into crude in just a second. We haven't looked at it. XLE not acting terribly great, so not a lot of confirmation on that really from the XLE sector. I actually, and I'm going to show you this on crude. I'm going to go back to it. You know, crude, let's just do the math really quick. On the August contract from, you know, around 42 neighborhood up into 46, so that's 4 points on 42. So about a 10% rally, maybe a little bit more. And we stopped a little bit yesterday at the top of our daily box here on our profiles, 45.29. We had a breakout today. Anybody who's trying to short against the top of that box, they got to be willing to, as of right now, kind of get stopped out. But there's a couple of things happening here on crude. We broke down below these recent long-term profiles. We're not there yet. I think now you got to wait and see on crude. Either let the market come to you at the 47.50 mark or get back down on that daily profile. So that's the crude trade, and the XLE obviously is not showing any signs of, hey, let's get on the bandwagon of crude right now. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2020, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, guys. Welcome back to the show. John Logan filling in for Tom O'Brien today. So what we're going to do now is we're going to look at some scanner picks here. General Electric, I'm looking at breakdowns, obviously, in the scanner. I just hit the little breakdown sort, looking at the S&P 500 and the NASDAQ in the sort list. General Electric, wow. I know this has been beaten up on TV, and I know a lot of people have this in their portfolio probably, or a lot of portfolio managers that are managing your money might have it in their portfolio. It's obviously a dividend play, but technically, this little thing just completely technically got smashed here this week. This is our weekly. I'm looking at the scanner. Let me get rid of our ribbon control there. So again, top of the profile, big two inflection points lining up there on the weekly, just massive resistance. Hit it 2 weeks ago and just came off. So again, great places to pick battles, stock in a downtrend, and now we could be in a hole in the marketplace and actually head lower. The only way you'd want to get long General Electric now, you got to be stopped out right now. And you might say, well, wow, what if it rallies? What if it doesn't? And sometimes you have to buy stocks higher than where they are now. I know that sounds really, really foreign to people out there, but you want to wait till it's technically okay to get back in the water. We've done a lot of studies with larger funds and institutions, and a lot of times they're really good at fundamentally finding out whether companies have value or are coming up with some new products or what have you. But technically, they're really no more sophisticated than a guy reading a Head and Shoulders pattern or something like that, if that. So, we go in and do some consulting for some of those folks and kind of back test. Hey, where'd you enter the trade? Hey, could you have waited to buy it lower? They're usually all on the buy side only. And, technically speaking, if you can find those areas to pick battles to enter the trade with that fundamental information, then you're kind of putting 2 and 2 together and it'll equal 4. So General Electric right now, you may have to wait, all things considered, to get back above 27.44 if it ever even does, to look at it from the long side. Now, the other thing that may happen is we may have a kind of another place to play defense lower, but right now it's in no man's land. And if you're kind of squirming about maybe missing out on a half a point rally to get back above there, that's kind of penny wise, pound foolish. And it could go a lot lower. Things on our lows go lower sometimes. And I learned that the hard way. So learn from other people's mistakes. Clack, again, kind of didn't want to get away from those lows on the unfair lows around 97.37, and then took the plunge this week, and some people had to start covering. So some technical damage on Clack, Lam Research, General Electric, believe it or not, technical damage on the downside. I'm showing these in the den on your screen. Kraft, similar situation. I'm looking at weekly breakdowns right now, all within the scanner. Starbucks is a little bit different situation. I think we need to actually head a little bit lower to kind of quantify that as really in a bad situation. So I'm showing ExxonMobil right now, not really wanting to get out of its own way. This one, it's a little scary to be in this right now. All right, so just to name some names. So, why am I looking at breakdowns? Because, like we talked about at the beginning of the show, when markets are kind of looking strong and hanging in there, some stocks show themselves early as, you know what? And this is the way I look at these things. If the market continues to go north, some of these stocks that are breaking down could just catch up, and that's just the way it goes with the market dragging everything up. But if the market ever does decide to go down, a lot of these stocks that are already breaking down will be easy pickings on the short side, and they may not provide a lot of pain to be short. If the market rallies, they've already said, you know what, I'm done. So you're trying to increase the odds by doing a relative weakness play on some of these instruments. All right, so I'm showing the scanner on the screen. I want to go into my matrix grid here, and what this thing does, it lets you dial in some risk-reward scenarios. So what I've got is I've got every pick on the board that out of the 6 custom sorts that we have, and I'm going to dial it in. Well, let's see. I'm going to put my risk-reward at 3 and above, and I'm going to go in here to my risk-reward section, and I'm going to dial in what might be one of the best trades right now, risk-reward wise. So I've got a daily time frame up there, and what we're doing is we're kind of breaking out finally. I'm going to kill this here so we can get some more real estate. Kind of having a little bit of a breakout, nice close on the daily there on Marathon. Risk-reward 8. And there's the weekly. So a little bit of a worm turning kind of situation on that possibly, and a little bit of a technical damage for shorts finally. So again, how do you play defense? You might want to look at this finally as a chance to play defense around that 1182, pretty low risk trade, because we've got to close above on that one. So that's how you find quick opportunities in the scanner. All right, going back to our charts, I want to look at a couple other things we've kind of omitted here. I want to look at silver. And I'm looking at a continuous on silver right now. So here's a long-term on silver. Not been doing a lot, just like gold, kind of settling back. But I want to look at the daily here on silver. So, for people who want to be long silver, you got a chance to play defense below 1642. Your upside target initially is going to be 1705. So, you can do the math there and do your own risk reward scenario. So if I put stops based on my appetite for risk below 1642, I can do the math. I can look at my target up top 1705, and that's kind of the way the risk reward scenario works all the time. And it's 66%. Let's see. Wait, what am I saying? Let's take a look at, Let's take a look at copper. Copper's been on its horse. There's no doubt some of the dollar cave-in has got some commodities repricing themselves, especially crude. But copper's got some headwinds up at 2.75. Why? Top of the profile on the weekly. And I think this trade's about over on the long side right now. So I wouldn't get too excited unless we can get a weekly close above 2.75 if you hadn't gotten in this long already. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Tom O'Brien is off today, and I'm going to be finishing up for him here this hour. This is John Logan. Okay, so one of the questions in the den, very good question. What happens, what does it mean when basically you have our POC basically mapped to the same, on the technical side, on the same level as our unfair low or unfair high on the profile? That just means there's way more significance in that particular inflection point, period. That's basically what it means. So there's more support or more resistance that's mapped to that particular inflection point. I'm showing the XLP here right now, the staples, the XLE, excuse me, the XLP, excuse me. So kind of had a little bit of a dent in this euphoric sector. 54.77 support on this now. You know, that's, I mean, I'm still looking at this as a relatively strong sector. We just kind of had a little bit of a back and fill moment the past couple of weeks. Somebody had asked me about that one too. I think we've got we got a couple of minutes left here, so I'm going to type in some of my favorite stocks to speak about here. I got to talk about Apple. That's kind of on everybody's radar screen. We were talking about this one. Actually, I was talking about this with Tom. Not a bad opportunity to buy a strangle on Apple right now. We've just kind of settled into a balanced area. We just kind of stayed within it almost for the last couple of weeks. And, this could go either way. I don't know if it's going to go up or down. I know you don't want to hear that from somebody who supposedly knows which way stocks may go. But when we settle back in a balanced area, we just kind of sit there. We're building potential energy in the stock. And usually, and that goes for the same thing as the daily here, if you're looking at this. So volatility's pinched in. And could have a little bit of an explosion if you trade options. Kind of buying some wings out there in a low vol environment might not be a bad idea. Let's take a look at Amazon. All right. So Amazon, interesting situation, kind of took it on the nose and is actually kind of selling off on the close here. Closing back in the profile below 977.80. This is kind of significant to this. The good news is, if you're thinking this might trade the whole profile down, 913.30 is just massive support on this. And you can play defense above 977.80. This is one of those situations too. I don't think you can go long anymore until we cross the border, if we ever do, above 977.80, or traverse. These are for longer term investors. Traverse all the way down to 913. That's the drill on Amazon. All right. So in closing here, we're going to go back to the S&Ps just to recap for guys checking the slate. Defended some serious support areas this week. Yesterday, in fact, 2404.50. S&Ps look ripe to actually move higher, and those shorts don't want to hear that. Crude, I'm expecting this to reverse back down into 45.29 if that's humanly possible. A dollar rallying would help that, but we want to see that happen before we start thinking about trading this back down to 43.90. Notes and bonds could head lower, and you want to, again, find some place to play defense if you're thinking about going long now, and that's just not available. We're going to close looking at IBM. And why? Very similar situation to Apple. I want you to notice very, very thin profile here on the long-term weekly between 152, 157, 158. Might not be a bad place to buy some option strangles. Guys, you've been great. Stay tuned for the rest of the Tom O'Brien Show, and hope to see you soon.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.